kind of feel like a little progress each day, each week.
Mhm. Well, just stay consistent, even if you're. Oh, I had the other one. Yeah, I think I had the other one going anyway. I have to record on two machines just in case the primary acts stupid. There we go. Okay, yeah, so good evening, guys. Ken at Tortoise Capital. This is the small group coaching session for March 4th, 2024. So was talking about a little research project I've started on quantitative trading, and kind of prompted by the chess career of Andrew Tang, who's about 19 years old, just completed a master's in financial engineering and operations research. Somewhere somewhere crazy like MIT or something. And he's a world champion in ultra bullet, which is all your moves in 10 seconds or less. And then he's a top 5 in bullet, which is all your moves in a minute. Grandmaster. And also now completed his internship as a quant trader. So I'm interested in that whole pattern recognition thing because I'm interested in Malcolm Gladwell's book Blank, which describes how you can reliably train what he calls thin slicing. And that is, you take a complex behavior and you parse it into thin slices and then train each of the slices to be instinctive. Essentially, training your own pattern recognition like a neural network. And he talks about how pattern recognition and intuitive decision making is a feature of expert decision makers. Like the hiring process for major orchestras, symphony orchestras, is a double blind audition. But in his research, it's found that the evaluators know within 2 seconds if the person has the chops. Like he talks about an example of a lawsuit for the Berlin Philharmonic where a female trombonist was auditioning and they selected her, but when they revealed that she was a woman, they were going to withdraw the job offer because it's traditional wisdom that women can't play the trombone. And the symphony orchestra lost uh, the lawsuit because on the only thing that mattered, the double blind, they decided she had the chops, and they could not argue against their own standard of the double blind. So they kind of set themselves up there. And it was just an example of how, culture can overcome your beliefs in some sense, or the evidence of your own eyes, or in this case, ears. So I'm also, as part of this little project, looking at there's a recent article that was done on how I became a quant trader that interviews 25 quant traders and what their pathway to trading in that style is. And it's going to be different than the standard human who trades on the basis of their beliefs. These are folks that are trained to trade based on pure numbers. So, I'm interested in seeing how that goes because I'm interested in obviously in adult education and training judgment that is contextual to circumstances, and that's what we're trying to do. And it reminded me of what you guys were talking about when I came on, about how it may feel like you're not performing well because you're thinking of you're seeing all the places where, hey, didn't optimize, or if I had done this instead of that, the results would have been different. But when you go to the tote board, the numbers actually tell a different story than what your feelings feel. And I was on a related subject, my thought process going into work today had to do with the 5 ways of thinking. And if I could find my pen, I wanted to, before I forget, the question that came into my mind was the idea of what turns the light green. I pictured all 5 ways of knowing as as almost like a traffic light for drag racers. Um, or like a signal board, I guess. And let me see if I can pop this up here. And so it just sort of occurred to me that if you thought about each one of those ways of knowing what it takes to turn that light to green, they're all kind of in the red status, not persuaded yet. And then there is some feature that turns all of those to green. There's the head, heart, gut, hands, and feet. And so there's something that makes your rational mind say, yeah, you know what? I am persuaded rationally by the numbers. Maybe it's some back testing and it's histogram and forward trading or whatever it takes to persuade you that that is, I'm not sure yet. But then there's something that tells me that's good to go. And then the persuasion mechanism for each one of those ways of knowing is different. Like, how many successful trades in a campaign plan do you have to, is it 500? Is it 1,000? Is it 30? Whatever. And then what persuades you that you have the skills when you're concentrating that you can do it? And then what is it that calms the fear or acknowledges whatever word is whatever the right verb is about fear? What is it that allows you to trade at production level in a routine way? The absence of fear, the management of fear, proper insurance for fear or something, whatever it may be. What is that thing that allows it to go green? And then what is it that in your value system it says, I feel like I'm connected to my purpose and I have a vision for a path ahead. And it resonates with my identity and my values at some root level. So this feels like a proper thing for me to be doing with the time of my life. Of all the things that I'm doing, is this something that I should be doing? And I can have something like, I don't know, professional pride or personal pride or values judgment of honorable profession. So each one of and then I don't know anything beyond the words about Van's work with persuader strategies or whatever he used. There's some kind of persuader mechanism that gets you to be able to act with certainty, but it seems like it probably would have to do with something. What is it that allows me to go from solid disbelief to tentative belief or making progress as I go? What's the evaluation criteria? Do you even know what that is? And is there are these beliefs over here or evidence that says, hey, I'm pretty certain I cannot do that thing. Yeah, I can, I'm gonna be humble enough to just announce, hey, I can't do that yet. I don't know the thing in my head. I'm not sure it's the proper thing for me to do in my life. You know, my fears, I can't even name them, so I I reject it. I know I don't have the technical skills yet. I'm not even sure what those skills are, much less knowing that I don't have them. And I haven't been doing this long enough to get a sense that I have a good understanding of what this whole field of endeavor is like. So then there's something, I think, that moves us over into this working, the learning. This is probably where the learning is what's going on. So we start moving along that pathway, I suppose. And then there's some kind of threshold where you just say, you know what, I think I got it. I also think that I've seen guys that may have this over here in their head, but there maybe it's the fear is the important one in the yellow. And so as a way to combat that, they think, well, I'm going to spend my time becoming more confident up in here, when it may be that, hey, I'm just avoiding the work or avoiding the issue of moving the gut, uh, uh, facing my fear or managing my fear or accounting for it in such a way that maybe that's the work that's got to be done, that my heart and all the rest of me is waiting for me to do the work that I know needs to be done, but I'm avoiding it by spending my time on the head. I've been there, done that, you know, the illusion of progress. Whereas I think it feels to me like whichever one of these is your weakest self-perceived area is probably the one that defines your level of performance. Thing that's holding you back, or the thing that's keeping you at a certain level of skill. So that's kind of where that was the image that came into my head today, was this idea that each one of these has a different uh, means of persuasion, or different standards of acceptance of what does it take. And I think that it came down in my, as I was driving in, it was like, what is the thing that allows you to get over the hump? What would it take? And I think it's different for each one of those. And so I was kind of struck by your comments when I walked in about um, your feeling. It was probably your gut was saying, this just isn't working. But in fact, the numbers are showing that it's better than I feel. So it makes you wonder how, not to discount the gut, but it's all part of this, uh, the collection of the different parts of you that give you confidence to act and perform. And my spider sense is that you got to get everything over this line to the point where it is at an acceptable level of performance. And then we can talk about refining our practice. But until you get everything over the hump, it just seems like that we're not really ready for truly professional engagement. We haven't locked in our franchise, if you will, our brand of what's going on. So that was the uh that's what my drive into work was like this morning. It takes me about 12 minutes to get in, but I had a lot of coffee in me, so I was thinking fast. So that was the image that was coming to mind. So I just want to share that. Let's do a quick check-in. How are we doing, George? Anything new and exciting?
Um, well, not new and exciting. Last week was break even, which I can go over. Um, but yeah, pretty much just focusing on the same things. and just keep working on the same stuff.
Jonathan, I have a write-up that I sent you a quick answer, but I wanted to go deeper, if you don't mind, later into
Oh,
answering
great.
your
Thank you.
written questions. Because I'm just doing a terrible job explaining that idea to you. And I could tell from your write-up that I have not done a good job explaining it. Because there's a couple key points I want to make. So I do plan to get to that
Appreciate that.
tonight. Yeah. But other than that, how's it? Other than
Um,
that, Mrs. Lincoln, how did you like?
Other than that, well, nothing too much. I was at my mother-in-law's last week. She was having a shoulder replacement, so I went out there to kind of help out with my wife and supervise. So she did well. So I was kind of out of the markets last week, but was able to do some didactic work and um, get prepared for this week to kind of hit the ground running. So get some good trading in this week.
Okay. And Juan Carlos?
Yeah, hi. So yeah, trading wise, I had like a, let's call it a sideways week on the system that I'm running on Alcoa. And it was very intense week for me because I spent a little bit of time defining the exit strategies and taking profits and stop losses and all that kind of good stuff.
Mhm.
Reviewing the foundation modules around that subject. And I've been coding. I've been coding on, I built, let's say, the framework that I'm going to use for coding all this in C#, like a client server environment,
Mhm.
and start migrating all the indicators. But yeah, I got the framework working, and that's a good thing, but it took me multiple hours to get that up and running.
Okay.
Looks nice.
Hey, I'm gonna come back to you guys for your status report check-in, but while we're fresh and it's on our mind and I have this chart up, I wanted to jump, if I could, right to Jonathan's question.
Mhm.
I'm gonna come back to this chart here in a second. So the points I wanted to highlight here. Let's see. Wanted to ask how I enter trades in my log. Do I log both the execution risk and the R associated? No, only execution risk at the detail level for each trade. That's the only thing that I want to check. The dollars, I just do a daily net. So like all source trade, whatever the trading patterns were, just comes down to a daily net for me. And that's all I'm tracking anymore is just, I want to know that number. So this might be the 3-minute. And the 3-minute might have had I might have had some WMB3s and some frog boxes and an SSR and a COTA 2 and a collapsing door. So I might have had a bunch of different patterns on the threes. And then I had a bunch of things happening, the standard patterns on the 30s. And that's typically what I'm looking at because those are my intraday trades. And that's what I'm looking at for the daily net. For day trading. And then I
No,
look at a weekly net for swings.
I guess the execution risk is telling you how well you executed, how well you executed the pattern.
Yeah, in a sense, yes. It talks about the quality of the setup, the quality of the frame to choose. Like I'm going to use that. I'm going to use execution risk in order to make decisions about should I be doing more collapsing dragons or should I be doing more SSR or SSCs, supported spring, or more kata twos, or more Z3 pinches. That kind of, it's looking at the efficiency of capturing good enough moves, which is a combination of, from the moment that I get in, there's something like, I'm going to pick some kind of execution risk, which says that 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 trade is over. It does not work. There's whatever the hypothesis of the trade was. And that's going to be different for each one of those patterns.
I guess what I was turning me around a little bit is, say you get in, your initial trade was an SSC.
Yeah.
And it had a larger risk box, and you got 1R, and then your next kata 2, a lot of the kata 2s often have a much smaller risk box.
That's right, because you'll see the PSAR comes up like this, and then it flips, and the PSAR box here is really small compared to the SSC's.
Right, so you could have had a
So you could have
had a 1R gain on your SSC and a 1R loss on the kata 2, but actually really have been up because
this might have been
kata
that.
2 is so
Well,
much
that might have
smaller
been a 30-cent.
monetarily.
This
Yeah.
could have been a 30-cent execution risk, and this might have been 10 cents. But in point of actual fact, if I get long at each one of those, and that thing fails, and I take a minus 1R loss, and this one fails immediately, and it takes a 1R loss, those losses are identical in terms of there is a hypothesis for each one of these, which says that this thing, whatever this execution risk is, there is reason to believe that there is a 2R move available to it. And in this case, it only has to be a 20-cent move to justify a 2-to-1. All right. And if, for example, in my position sizing risk, I'm deciding the number of shares and the amount of money that's being risked on that, the number of shares. If it's always $400 or if it's always $100, and if my intention is to make each one of these 1R losses equal to a loss of minus 0.3, then a 1R loss on each one of them equals the same number of dollars lost. There's more shares, but the dollars that are lost are the same. But one of the reasons that I want to discount that is maybe I have some systems over here that are in production that I feel very, very good about, and then some that are in prototype that they're good enough to trade and to investigate, but I just don't, and I want to know which one should I have enough money left to take one trade. Which one should I take? So what I have to do is understand the theoretical R capture, which is the dollars per share that trade captures. In both cases, I can see a 2-to-1. So I'm estimating that this is a manageable risk. and that this is a manageable risk, and that if it goes below there, I got no business being in it. So I'm out at the risk that I could reasonably manage is there. It hit it, I'm out of the trade. And all it
When you-
has to, yeah, go ahead.
When you're trading a standard, you have a standard position size, you've got your 400 for a particular name. Say
Yep.
it's 100 shares. When you enter that SSC, that's got 30 cent risk and the kind of two that's got the 10 cent risk, you're doing 100 shares for both of those trades, even
No,
though
sir.
the execution
No, sir.
risk is less.
Nope.
So you're recalculating based on the risk.
Yep.
Oh, okay.
The position sizing risk tells me the appropriate size that I can have. So one of the reason, like on the 3-minute,
Okay.
that might be a 20-cent PSAR flip box. And on the 30-minute, that might be an 80-cent PSAR flip box. Okay. So if all other things being equal, if I risk $100 on that, in theory, I could get 500 shares. If I was going to let the position sizing risk be equal to the execution risk. Now, my guidance to you is make that, I said 1/3, but just to make the math easier, I'm just going to divide them both by 1/5 or multiply by 1/5. So that even though mathematically I could justify 500 shares, multiply by 1/5, I'm going to actually buy 100 shares on the 3-minute. But if I've got 80 cents on the PSAR flip box, and I divide that by, 4, I can get 80 cents divided by, is it 50? No, I'm sorry. That should be $500 times, yeah, 500 shares. And then 80 cents times 100, I could get 125 shares. No, that's not right. 5, yeah, 5. Oh, yeah, that's right. Yeah. So I could get 125 shares by risking $100.
So you'll
And-
do
and-
that recalculation depending on what the execution size is, you'll
Yeah.
increase, reduce your shares. It's still $100 risk.
Right.
I got turned around the other day because I thought we were talking about the different execution stops,
Yeah.
and you were talking about how, if you had a 10-cent stop versus say a 7-cent stop, you'd have 30% more shares.
Yeah, I
for the
could. I actually
stop.
could. Yeah,
Um,
I could.
I
It's the same
personally
dollar. It's the same dollars at risk. Right. Now what? So let's say on the 3-minute, I've got 20 cents of risk, or 20 cents on the PSAR flip box. And on the 30-minute, I've got 80 cents. All right. If I risk $100, I could have 500 shares with 20 cents risk. At 80 cents of risk, I could have 125 shares and still have only $100 at risk. Are we clear on that?
Yeah.
Now, what I suggest is don't make, and this gets to the psychology of it. Here's my PSAR flip box. And so I get long here. If I set the execution risk, which is here, equal to the position sizing risk, then I guarantee you that in my little pigeon brain, as soon as that thing starts failing, I don't want to take more than a 1R loss. So I end up talking myself out of this because of fear to exit before it gets to 1R. Because my worry is, hey, if I get to 1R and then I push the button to sell, maybe my fill is bad because that triggered a collapsing dragon. And so I tried to exit with 1R here. And I end up taking minus 1.5. And then I feel like a failure in life. So in order to not feel that, I end up talking myself into exiting somewhere inside the noise. And I don't want to do that, because the whole idea of the minimum manageable risk box was to make this thing the smallest noise box that I could, and then recognize that it's not until it comes out of the black box. This is the noise. If it comes out of that noise box, then and only then the hypothesis is disproven. Now, that's why I say, instead of making that a -1R loss, I exaggerate and say, make that a 0.2. Make the position sizing risk 5 times larger than the actual PSAR flip box. All right. If you do that consistently, you end up getting into this discussion. I start having a 20-cent risk on a 3-minute PSAR flip. And if I can gonna risk $100, it allows me to have 500 shares, but I'm only gonna make that 1/5. So I'm gonna come up with 100 shares. Clear?
Yeah.
And then on the 30-minute, I have a 30-minute trade pattern that I'm going to trade. And that one happens to be 80 cents. So risking $100, I could have 125 shares, but 1/5 of that is 25 shares. So it still turns out that the 20 cents versus the 80 cents is 4-to-1 difference. So I have 100 shares versus 25 shares. So there's a 4-to-1 difference, but it's still $100 at risk. And if I take a -1R loss on this one, I lose $100 because I was risking $100. And if I take a 1R loss on the 3-minute, I lose $100. If I make 2R on the 30-minute, it has to move $1.60 because I was risking 80. If I'm on the 3-minute, it only has to move 20 cents to give me a 1R. Because I was risking 10 cents a share, and then I only had to aim for 20 cents. Now, one of the things that you'll notice is that when you're on the 3-minute, on the intraday move, from wherever the entry was, regardless of the pattern and regardless of the time of day and regardless of the timing model that I'm using, there was some price that was the low of the day so far. All right. There is some price that is the working low of the day. And the maximum reasonable intraday move, whether I'm on a 3-minute chart or a 30-minute chart, it's always a range stat. Okay? Check?
Yeah.
Yeah. So when I enter in here on a 3-minute and I've only got a 10-cent risk box because of the size of the PSAR box, that thing only has to move those 2 little chunks to get me to +1 or +2, sorry. And if it loses 10 cents, I'm at -1. On the 30-minute bar, if I get in, it has to move not 20 cents, it has to move $1.60 to get my 2R chunk. But I have a much wider buffer of the price that makes it lose a full R. So one of the things that happens then is that on the 3-minute if that thing starts moving in my direction, you know, in practice, a 20-cent move is nothing compared. Let's say it's a $2.50 range stat or $2 range stat. That'd be about right. So I'm risking, maybe a dollar range stat. Whatever the right numbers are. It doesn't take much of a move to get me to no lose plus dinner for two. And this could happen in 2 or 3 minutes, preferably 1 minute,
Yeah,
but 2 or 3 minutes, I get no risk left and I feel great. And I like that because my position size now, once I've got my risk out, they can both today move that far. But if it happens on a 3-minute chart, a 3-minute trade frame, I like that one 4 times as much. You see what I mean? But the span of control on a 3-minute chart is 1 or 2. On a 30-minute chart, it might be, 7 to 10. Just because there's so much damn time while it's in that bar monkeying around. So my stress level is much lower here, but I could also have 4 or 5 times as many positions as compared to the one chart on the 3-minute. And because I got to make so many decisions in here, I get tunnel vision on this one, and I can't look to my left and right and see what else is working because I only got a minute to see what else is happening. I got to get back to what's going on in this thing because it changes that fast.
yeah,
Whereas the span of control on a 30-minute is a lot easier. So my standard practice is, I assume I'm just going to trade them on a 3, and then I try to pick 1 or 2 that are working right away in the first 30 minutes. And later in the day, if one of these that's on my 30-minute is really head and shoulders above the other ones, I might then drop that into a 3-minute and see if I can get some extra juice on something that's already standing out on that long haul. You know what I mean? It's like on this one, on the 30-minute, I'm looking at a bunch of long haul truckers, and there's a bunch of them all bucking around in here. And there's one guy that after an hour has really pulled way ahead, and there's still this much time left before the end of the day. So I'm thinking that may be the guy that I'm going to drill down, and I'm going to be very tactical and try to get more, because now I could double the position size. I could put a turbo on that one.
yeah,
Maybe so maybe what I have on that one is I start a bunch, let's say they're all about the same price. And so I had a bunch of them at 25 shares. And then I see this one going. I said, hey, let me put 75 more shares on him and make him 100. Or let me put 100 shares on him and make him 125. And then when it gets on a 3-minute, there's a natural exit. Let me sell the 100 and just keep the 25 cruising along until its signal to get out says get out. So there's a fast lane and a slow lane. There's like the in California, whatever it is, the carpool lane versus the truckers lane. Truckers stay to the right and take a long haul. And you're going around the city. So I know that I have more room to give back, if you will. But what allows me to decide between, hey, which pattern and which time frame, there are so many different choices in there that what I have to do is just take a look at the risk per share in order to say the box is this big compared to the rewards that big. How well did it do? Well, I had 50 trades and my success rate was 50%, and the average win on that one is 1.0 or whatever. And my average loss, because of reasons, is 0.5. Oh, that's good. That's a 2-to-1 reward to risk payoff with a good coin flip. And now I can and that was on a 3-minute COTA 2, and I can compare that to a 30-minute SSC. Which one of those do I want to? So the only way I can do that is to say, when I'm evaluating the pure theory of the trade, the hypothesis of the trade, I'm risking that much, and I can consult my histogram and say, did I have, in the last 50 or 100 trades, did I have any that had more than a 1R loss? No, that's good. I'm able apparently to identify a risk at 1R and then not take losses greater than that. That's good. And then I can see, now, how much of the notional reasonable 2R was I able to get? Well, I can now judge on the winning trades what is the size of the moves, and then my efficiency of capturing those moves. So you can be kind of detailed on that. How would you do that? What was the maximum favorable excursion? And therefore, how much of the maximum favorable excursion did I capture? If I could get like 30 or 40% of that, I'm generally pretty happy with that. Because that tells me there's maybe a way to improve the capture, but I am efficient enough and risk managed enough that I have positive expectancy and I got more room to improve. I love that. And then the positive expectancy pays me to figure out how to get more of my maximum favorable excursion. There's 2 ways that you can get that. 2 places that you can improve your R capture. One of them is to reduce the size of the risk box. If I get the same capture on a winning trade in terms of dollars per share, but I make my risk box just a little bit smaller, I'm going to increase my efficiency, and that's going to increase my position size, and that's going to increase my dollar capture. Check or hold?
No, that makes sense. I got it backwards. I was doing it the way
Yeah.
that you described, where I would change the number of shares based on the risk size. I thought that you were saying you traded the same number of shares regardless of your execution risk. So I was trying to reconcile that.
Where that actually turns out to be kind of true, though, is like on the 3 minutes, maybe the PSAR box on the very first one, which is typically an SSC.
Yeah.
That's going to be the widest one. And let's say that was a 30-cent. And then later there's a COTA 2, and that was a 20-cent. You know what I just might do? I might just say, you know what? I know that I could have a little bit more position size. You know what? I really feel comfortable with that. And that just looks so narrow. Let me just go ahead and use 30 cents and be consistent all day. And that's how I get less than a 1R. But now here's watch what happens to the risk box. Watch how easy this really is. So now the PSAR flip is still the thing that's going to get me out, and I'm going to get out when it's 20 cents. But my actual 1R loss was 30 cents because I opted for the consistency of this one. Even though technically I could have been smaller and increased my position sizing by 50%. I sort of like that first one is like 30 cents. And I know my position sizing is 1,300 shares. Okay, got it. Let's just use that one. And then I will position size off that 30 cents, even though the execution is only 20 cents. And that's where I could take a minus 0.6. instead of the full 1.0. Do I leave some money on the table if I do? Yeah, probably. But boy, the sense of calm means that I actually have more psychological